It's a common knowledge that the purchase of a house is the single largest investment most people will ever make in their lives. Due to the ever-increasing price of home ownership, achieving this goal is becoming increasingly challenging. It's likely that many people may be unable to purchase a home whatsoever. Those that do will struggle to cover the cost of their homes, including their mortgage, taxes, and other upkeep. Home buying can be more accessible and pleasant for the ordinary individual by following a few simple guidelines. If you follow these rules, you will be able to afford the home of your dreams without becoming house poor or running out of cash for other necessities. These procedures will help you avoid foreclosures by ensuring that you can pay all your expenditures of owning a property. To learn more about investing, personal finance, and other relevant topics, please subscribe to our Rise and Grind YouTube channel by clicking the button below. For more videos like this, please subscribe so that you don't miss out on future releases. You can also give this video a thumbs up if you thought it was helpful. Number 1. The first step is to figure out how much money you have to work with. How much money do you have to spare each month to cover your living expenses? When it comes to housing costs, the overall opinion is that you shouldn't spend more than 30% of your total monthly income on them. A popular myth is that you can apply the same amount of money you're currently spending on rent to your mortgage. Many additional costs come with owning a property. Owning a home comes with a slew of expenses, of which a monthly mortgage payment is but one. If the heating system fails, who will foot the bill? How would you handle the situation if your roof had to be replaced in the future? You're going to have to conduct outside maintenance and painting repairs on a regular basis. When the floor starts to show signs of wear, it's time to get a new flooring. Only rent and utilities are all that renter has to worry about. On the other hand, a homeowner has to worry about all of the above and more, including unforeseen expenses. The cost of utility bills should be taken into account while deciding on a new home. Consider the cost of upkeep versus the cost of capital expenses, such as the replacement of a roof or an appliance. As a general guideline, allocate 1 to 4% of the price of the home for repairs. Based on the age and condition of the property, $4,000 to $16,000 a year could be expected if the residence is worth $450,000. Number 2. Improve your credit score. For first-time home buyers, getting a mortgage and negotiating a good rate may be challenging because they may have limited credit. It's worth your time and effort to improve your credit score prior to making any decision about home purchase. It doesn't have to cost a fortune to improve your credit rating. Using a credit card and paying off the balance as you soon make a purchase is one of the techniques to avoid incurring interest on your credit card debt. If you have other debts like college loans, don't skip a single payment. It will be easier to get a mortgage with less debt. The amount of money lenders are ready to offer you is based on your entire monthly income and your total monthly expenses. The lower your debt-income proportion, the more desirable you are to lenders because you can afford to repay your debts. You should start working on improving your credit well before you want to buy a home because the process might take years or even decades. Number 3. Understand the difference between wants and necessities. How can you ensure that you're purchasing the right home in terms of location, price, and other considerations? There are a plethora of factors to weigh, and finding the right balance can be difficult. To make matter worse, the home buying process can be emotionally draining, making it harder to make rational decisions. Make a list of your wants and needs. Needs are what make a purchase worthwhile. It's possible that you need 4 bedrooms, and if you can't get them, you shouldn't even buy the house at all. A yard may be necessary, but it's best to stay put if it's impossible. What are not necessities? Having them would be nice, but not having them won't prevent you from accomplishing anything. If a 30-minute trip downtown is out of your price range, consider settling for a half-hour ride instead. The earlier you start accomplishing this list, the more likely you are to find a home that meets all of your criteria and is within your budget. While going through the emotional experience, it will be good to keep a reference list handy. Number 4. Put down a substantial down payment. For many people, buying home involves a significant sum of money, which make real estate an expensive investment. With just a few thousand in your bank account, it's not going to be easy to buy a house. These are programs for first-time home buyers that only demands a small deposit, but putting down at least 20% is a smart move for a variety of different reasons. To begin with, it will significantly lower your monthly expense. In the case of $500 property with a 5 interest rate, putting 20% down would result in lower monthly mortgage payment of about $700 than putting only 5% down. A greater down payment obviously result in a lot smaller amount borrowed, but if you put down 20% of the purchase price, you will also avoid having to pay mortgage insurance, which is often needed by a lender if you have less than 20% of the purchase price saved up. There will be less chance of owing more on your house than is worth because of this greater equity portion if there is a significant decrease in its worth. Number 5. Budget for closing costs. In addition to the down payment, closing costs must be factored in when calculating the total cost of a house purchase. It's important to know what closing costs include and to prepare for them in order to ease the process of purchasing a house. Closing expenses for a 5-figure home might run everywhere from 2% to 5% of sales price. In addition to the down payment, this might cost between $10,000 and $25,000. Evaluations, inspections, legal fees, a few months' worth of insurance, taxes, and homeowners association dues are some of the costs and fees that your lender will incur in order to initiate the loan. Closing costs can occasionally be financed through the mortgage and rolled into your monthly payment, but this will raise your monthly payment and leave you with the burden of paying them for the long term. Number 6. Keep some extra cash on hand just in case. There is no guarantee that you will be able to make a particular housing payment in the following month, even if you were successful in making it in the previous month. How predictable is your monthly salary and does it fluctuate? This could be the case if you're self-employed, have your own firm, or work in the service industry and get most of your money from tips. How easy could you get a new job in the event that your current job was no longer available? Things to keep in mind when calculating how much money you can spend. Your housing cost should not be based on the month in which you earn the most. When you become a homeowner, it's also a good idea to have a greater emergency fund to deal with unexpected expenses. For renters who can no longer afford to pay their bills, moving in with relatives and friends may be an option that saves them money. Foreclosures occurs when homeowner is unable to keep up with the payments on their mortgage, resulting in significant financial damage. Number 7. Be aware of the price of goods. There are several advantages to purchasing a home that needs some TLC, such as building equity and increasing the value of property. You need to come to terms with the fact that restoring the property is sometimes a great deal more challenging and far less spectacular than experts make it look. Take for example, the case of a home that is in severe need of kitchen renovation. Are you willing to spend between $25,000 and $40,000 on a kitchen remodel? This is the typical price. Adding a new bathroom will set you back anywhere from $6,000 to $15,000 in addition to the cost of the flooring. Will you be able to create equity as a result of these changes? Alternatively, the property costs $450,000 and needs $50,000 worth of modifications. The new value may simply $450,000 or what you've already spent on it. It can be fun to be full control of these remodels, but if you aren't ready for many hassles and difficulties that comes with a job, it could flip your fantasy of buying a home into complete disaster. Number 8. House hacking may be the finest approach to getting into real estate market and becoming a homeowner. It's possible to live rent-free or significantly less price if you purchase a home that generates enough rental revenue to meet your living cost. The most popular example is duplex, in which you stay in one apartment while renting out the other. However, the possibilities are virtually limitless. You may rent out spare bedrooms in a single-family home, a basement that has been renovated, additional grounds, storage areas, or even auxiliary housing unit. It's common for folks to object to this idea as though they're too high-minded to use it. They have no interest in parting with any of their property. They can use this because it doesn't apply to their location. Is this the optimal scenario? It all boils down to how you choose to interpret the situation. Being house poor is undesirable, but having your living costs paid for is a wonderful luxury. As a buyer, you want to ensure you're securing a house that's going to be a good fit for you and your family. There is no use in making this purchase if it turns out that it was completely waste of money and that procedure was a major catastrophe, leaving you with no money to live on. Even though many individuals regret buying their first house, following these tips will significantly boost the chances of finding a property that meets your goals and finances. We really hope that you found this video interesting. Let us know what you think by subscribing to our channel on YouTube or commenting below, and thank you for your support. In the meantime, we hope to see you again soon.